Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, good weekend, everyone. I'm Ira Epstein of Linn & Associates with your weekend financial market update, and this is for Friday, the 21st of April, 2017, and all the markets have settled. So as we're looking at them, an interesting day in stock indices for many reasons. President Trump took the market off the day's lows. The market had gotten very ugly when we saw big breaks happening in gasoline prices, natural gas, and of course crude back under the $50 a mark area, closing near $49.50. That was dragging on the markets. But then the president came out and said that as early as this coming week, we're going to hear about a very major tax plan. Now, he uses all these superlatives, so I'm not exactly certain what this all means, but certainly it picked the market up. In addition, what we're faced in looking at is the French election. It's going to have major impact if and only if the far right, the far left are the two people that are going to be running for the presidency. We assume that Ms. Le Pen, who is the far right, will be there, but if they can get the centrist in the center there, well, that balances things out. Of course, we don't know how the election will turn out itself, but that won't have a major impact, I think, on the markets on Sunday night. You get the two far ones, anything and everything's off the table. It can get very exciting. So we look at that. We see that the bond market closed unchanged today, notes close to unchanged. The gold was up, as you'd expect, as traders putting on the risk-on mentality into that market. The yen up, the euro down a little bit, and most of the other metals were lower. So things figuring out as they should be. Now we get into next week. We've got the debt ceiling issue. Remember, Republicans control both houses. They can easily say we need another week and extend the debt ceiling. But somewhere behind a closed door, there's horse trading going on. And this, by the way, when's the last time you heard from Nancy Pelosi or Chuck Schumer? I don't recall hearing from either of them in a long time, which means there's horse trading going on. Okay, the E-mini S&P 500 index, the monthly chart, you're still in this big run to the upside. Can't get away from that. From the peak, you're down to 2347 from 2401. That's not so bad. As we take a look on the weekly chart, we've had a correction and we're still drifting to the sidelines. Now, there are many top analysts coming out, and I know you know this, that are saying this market is definitively overvalued. I don't think people are arguing with them, but if you get the tax breaks in and you get infrastructure and health care, as the president keeps talking about getting done and getting done sooner rather than later, those people that are talking about that all admit the market could first go higher before a correction sets in. Just telling you what I hear on TV. As we take a look at how the market itself is playing out, we have a pattern that's got lower highs and lower lows. We had a bounce this week, which is great, but it didn't take out the previous high. So I will call the trend is set up with the pattern of lower highs, lower lows down. The market has stayed over the 18-week moving average. That is bullish. All it's done is pulled back approximately to that number. It missed it, to be honest, by about a point. That's not very much. So that zone found the support in the market. Now we have to wait and see what happens. And obviously, this is going to be a big week in all that. When we take a look at the Bollinger Bands, these black lines, remember what they are. They're an algorithm designed to keep the market trading within them 95% of the time. So when I look at the market, I interpret that as theoretical resistance, if it's going to contain the market, and theoretical support. And as you can see, it does a pretty good job of that. So the algorithm has a basis that I like. The market's got support. I'm going to call the bias to the market is to the upside, but the trend, the short-term trend, is to the downside. And yes, remember, these are weekly charts, so they're important. Momentum pointing down. That is part of and parcel of to this. This break we're having began right in line with that as momentum turned down. It is still pointing down at this point, so you don't need to be a hero, but you know the battleground. The battleground's the 2321 area, that 18-week moving average of closes. When we get to the Dow, you tell me what's going on. You've come right on down here the same way, and in fact, in this market, the low of the week did go through the 18-week moving average, and it held it. Now, the 100-week's far away, so I'm not even worried about that part at this juncture. And I will call the market in terms of momentum coming up, the momentum of the market down into the support, but the trend, like the S&P, down because the weekly trends have lower highs, lower lows, but it did find support and grab where it should have. The NASDAQ's a whole different world. First thing, momentum is still over 80 and pointing up. It has not begun its descent down. Number two, it does have the pattern of higher lows, higher highs. That's bullish. It's over the 18-week average. That is bullish. This is still the bull market chart, and it would take a break under 53.47 to even begin the assault down to the 18-week average of 52.42. So we have a different world here, but you've seen that each day because that's how the market's been acting. Then we get to the Russell. Now, I want you to look at the pattern of the Bollinger Bands, how narrow they've gotten. I want to take you here. Nothing like that in the NASDAQ, nothing really like it in the Dow, and nothing like it on the S&Ps. They're much further away. So this market, the difference here is even if it goes up or down, it's going to run into those theoretical support and resistance lines very fast. It hit that several times if you look at the weekly charts over the past month and a half. It keeps coming back each time to that 18-week average. If the market can clear 1382, which it did, and it closed over 1372, which it did, you call the market what? In a bull trend. You've got higher lows, higher highs. You've closed over the 18-week moving average. The next target might be the upper Bollinger Band should the market like what it sees out of the president up to the 1402 level. We also have to watch the election. Nobody knows how that's going to impact U.S. markets in France. In the VIX pushed out the upper Bollinger Band. In fact, it got over it 4 days in a row and then came crashing down, made a run for this 18-day moving average. This is a daily chart, not weekly, so that's the daily moving average. And momentum, while it started dripping away here, is pretty stable at the 68 to 70 level. I'm still going to call that an overbought condition, and I think it too is waiting to see what to do this coming week. We then get to the 10-year notes on the weekly chart, back to it, and you've got a pattern that's got higher lows, higher highs. If the higher this goes, lower interest rates go. Okay, it's an inversion market. Now, the market did close up and over the upper Bollinger Band by a fraction. I can call it on it or just slightly over it. It is getting into an overbought area, but the momentum is still to the upside. It has not backed away. It had been developing this sideways action similar to what I showed you in the Russell, and now it's trying to push that up and away. That is a market that's staying in an uptrend. All the signs of it at this point. If it falls back, the first support level should be around this 124.10 level. We'll see how that does. Dollar index has been in what type of trend? I realize the news loves to talk about the strong dollar. It's not a strong dollar. It's a weak dollar. You've got lower highs. You got lower lows. We don't know where this low will end up yet. That's bearish. The market's got support, theoretically, at the Bollinger Band bottom at 99, let's call it 13. Momentum has gone flat recently. It had been oversold. It came up enough to get flat. You'd have to take out 101.25 in order for this market to say it's bullish again. So I've given you the numbers, and it's got resistance at that 18-week average at 190. In the Eurocurrency, you're in an uptrend going into the French election. You have a pattern of higher lows, higher highs. The market has paid attention to the 18-week moving average of closes. The divergence that's taking place is the slow stochastics, the momentum oscillators, had been turning down. They're starting to flatten out a bit, which you'd expect going into the election. And you can see how the market keeps coming back for 3 weeks and hugging that 18-week moving average of closes. In the British pound, you have a bullish condition, and you have momentum to the upside. You've got higher lows as measured by the swing line. I use these arrows to show where the highs and lows are. You certainly have the higher highs. You were able to settle today at 128.14, which is over the 127.23 upper Bollinger Band. Now, the odds of the market staying above or below the Bollinger Band are only 5% of the time. That doesn't mean you can't get periods where it sticks its neck out, but does it stay there very long? I'll give you the answer. Historically, no. There's always a new event, but historically, no. This is a bull market that's ahead of itself, is the way I would describe it. Look for good support as the market pulls back into the bands. The opposite is true of the Canadian dollar, but it's not trending. It has a pattern of a higher high and a lower low. Battleground has been, for the past, honestly, since the end of February, the 18-week moving average of closes, the market is still in that battleground and caught in the narrowness of the sideways action in the Bollinger Bands. Now, here's something for you to mull over. The longer you keep churning like this in there, think of this as a pipe in a spring. Eventually, it breaks out one way or the other. That's what you're waiting on. Obviously, one of the things that has been hurting this market is President Trump talking about NAFTA and now starting to pick on the dairy industry there and the like. And, of course, crude oil prices coming down, and this is an export economy, not helping it whatsoever. What about grains? They've been getting killed too. In the Japanese yen, anyone can say all they want about this, but this is a bull trend. You got higher lows, higher highs. Momentum is still pointing to the upside. You even have now the possibility, I am expecting it on Sunday night, where the 18-week moving average gets over the 100-week. That's even more bullish. It's a bullish crossover, as they'll call it, at that point. Now, we did have just recently a bearish crossover right here that did not work. So I don't know if the bullish will work, but you typically go what does work. And when you get these crossovers like you had here, do you see how the market reacted? That's part and parcel. I use that word all the time. I'm going to get rid of it. But it's what it does. Okay, crude oil. Crude oil is fighting a heck of a battle here. It is stuck between these numbers. Let's call it the upper Bollinger Band in theory of 56, the lower of 48.11. The center point is around the 18-week moving average of 52.11. It has no trend on the weekly chart. It has a higher high and a lower low. The bias is down and momentum is pointing down. It's not a pretty looking chart. If the market continues to fall, I would look for the Bollinger Band to offer the first support leg. If that gave ground, 45.93. But if that happens, it's probably going to hurt the stock market in a big manner because the energy stocks will get hit. And what does it do for shale production under $50 a barrel? That becomes a question. In the nat gas, you don't have hot weather. This is that funny time of the year. You're not cold enough to get a lot of demand for heat, and you're not hot enough to get the demand for the air conditioning. Therefore, this market is still what I'll call in a bear trend. We've probably seen an important low down here. We rallied back up to the 18-week average, and we're still very much in this downtrend until you take out 334.70. The momentum to the upside has now waned, and the question is, does the market roll back to the downside at all? So that's how I'm seeing things for this week. I want to remind you, part of the ways that we see things is by using something unique that our company's developed here at Linn & Associates. They're called price counts. And what the price count does is it'll look at a price action, a chart pattern, and from that pattern, if the market breaks out, be it upside or downside, where might it go? Some people use Fibonacci. This is a combination of swing line, Fibonacci, and our own unique formulas here. Now, we teach you how to use it. We're not going to give you the formula, but we teach you how to use the software. You can plot it yourself. You can see what we do, and you can come up with the same answers and apply it to a whole realm of things. You're going to get PDFs. You're going to get videos if you'd like to work with them. And, of course, you need the charting software, which is our QT charting software. So how do you get all this? And it is free. Call us. Go to our website. You'll see a carousel of free offers. Or click up here. If you're watching me on YouTube, we'll take it the rest of the way. You have a good day. I will talk to you all Monday.